What's up, guys? Today we're going to be looking at Nike's Q4 earnings results, and you can see the stock is trading 10.7% higher in after hours. But we got a decent earnings results from Nike. They beat expectations. However, there are some serious concerns within these earnings. So we're going to take a look at those numbers. But if we take a look at the expectations, we got this nice graphic from Yahoo Finance. You can see they beat earnings per share expectations by 1 cent, and their same store sales were plus 2%. And the estimate would be down minus 2.6%. The CEO stated, while our financial results are in line with our expectations, they're not where we want them to be. And we can see that for sure, definitely within this income statement. So if we look at revenue, you can see May 31st, 2024 compared to May 31st, 2025. For the same quarter, revenue 12.6 billion in 2024 and now 11 billion in 2025. The gross margin declined from 44.7% down to 40.3%. And you can see the decline in revenue percent year over year was down 12% as well, which is not good. Gross profit down 21% year over year. If we take a look at net income is down 86% year over year. You had a $1.5 billion net income in 2024. That's now down to $211 million in net income. That is not good. Diluted earnings per share has declined 86%, obviously, down from 99 cents earnings per share down to 14 cents earnings per share. So this company is actually heading towards not being profitable. I don't know what the financial future is of this company, but it's not looking good. If we take a look at the balance sheet as well, cash and cash equivalents has declined 24% year over year. Total assets down 4% year over year, as well as the total current liabilities remain somewhat flat, which is not too much room for concern. Their long-term debt didn't really change. It says a 1% gain there. But overall, balance sheet is looking okay, but I would be somewhat concerned about the decline in cash. That's not a good look for Nike stock. This is not looking good. This is not what you're looking for with purchasing a stock. If we take a look at the valuation, you can see they have a PE right now of about 20. This is prior to earnings that came out this evening. So not a terrible PE. Forward PE is higher, of course, because you have less earnings in the future. So you're looking at forward PE of 28, which is not good. Seeking Alpha is giving valuation D+, but they're also giving growth a rating of F. Profitability A plus. I think that's going to change. That's definitely going to change with this earnings report as well. This has been, I think, their worst quarter in the past 10 years, maybe. I don't even know. This is not good. Diluted earnings per share declining from 99 cents to 14 cents is not good at all. This is not looking good. I'm not touching this stock. Some people like the valuation of 20. I could see that, but I'm personally not touching the stock. Last thing we'll look at is the analyst forecast for this stock. Of course, the share price is about $69 after hours today. You're getting a median forecast of $70 a share. So we've already almost reached that target price. So there's not really a whole lot priced in sort of growth for Nike stock. However, the high price projection would be $120 a share about 12 months from now. So not terrible. 42 analyst ratings are giving it 45% buy, 50% hold, and 5% sell. Nike certainly could turn around, but they are getting impacted by tariffs. They're getting impacted by a lot of competition, especially in the running shoe compartment. They're getting destroyed by OnCloud, Brooks, Hoka. A lot of running shoes are now giving them competition there. So let me know in the comments if you think Nike stock is a buy. If you got value, please consider subscribing. Y'all have a good one.